Let's quickly look at earnings per share. It's a very useful ratio of general profitability for a company. And the equation is this: earnings per share, EPS, is the profit after tax divided by the number of shares in issue. And for this very simple example, we can just put these numbers straight in. Profit after tax is given here on the statement of profit and loss, 12,000 in this case, and the shares in issue is given in the question as 10,000. So we can just write that straight in, 10,000, and that will give us our answer, plus 12,000 divided by 10,000, not very hard, 1.2. And that's going to be, let's put some units in here. That's going to be pounds. What's our profitability per share? And the answer is 1.2 pounds, or sometimes it's expressed in pence or cents, so 120 pence in this case. So that's very simple. What can make this slightly more complicated? Well, there are some deductions that we can make to profit after tax. Are there any things we need to pay out? And the answer is yes, there's preference shares. And what about the bottom figure, the denominator? Well, we can change shares in issue over the year if we either issue shares, of course, or there's a bonus share issue or a rights share issue. And all of those we'll deal with in the next video. But for now, it's just profit after tax divided by shares in issue is earnings per share. Very simple.